How did Warren Buffett's Berkshire Hathaway lose big? In 2022, inflationary bear market and why? 2022 is the start of an inflationary bear market and the start of tech layoffs. Even hackers are reportedly getting laid off by organized crime groups. After 1 month of disinflation euphoria and better than expected earnings season, the individual investor has now been thrown to the wolves of Wall Street. Wall Street bulls are now trusting the fairy tale of the never-ending economic cycle. The belief that the 2020 crash lasting 1 month corrected the longest bull market in history. 2023 will continue the bear market of 22 until something breaks or unemployment rate spikes. Then we will have the greatest opportunity to buy generation low. That is why Warren Buffett is still betting on America. In his recent letter to his shareholders, saying he continues to believe in the resilience of the U.S. economy, even though he lost money in 2022. How did Buffett lose more than $22 billion in 2022? What is the main reason that he lost big? I will explain it all right after this.
And of course, smash the like button. If you want to be my good boy, apply to write your first book with me.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, funds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you're a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true. You need to be my client, don't you? From the annual letter to shareholders, Buffett said, "The disposition of money unmasks humans. Over the years, I have made many mistakes. Consequently, our extensive collection of businesses currently consists of a few enterprises that have truly extraordinary economics, many that enjoy very good economic characteristics, and a large group that are marginal. Along the way, other businesses in which I have invested have died, their products unwanted by the public. Capitalism has two sides. The system creates an ever-growing pile of losers, while concurrently delivering a gusher of improved goods and services. This is called creative destruction. However, the Fed has been interfere this process by doing QE and printing helicopter money for the government to direct deposit. Stimulus checks which caused highest inflation in 40 years. So even today, everyone still has to pay for their mistake. I bet inflation is the reason why even Buffett lost money in 2022. Inflation firmed and American spending and income surged in January, which could prompt the Federal Reserve to raise interest rates higher than previously anticipated this year to cool price pressures. The Fed's preferred inflation gauge, The personal consumption expenditures price index rose 5.4% in January from a year earlier. The core index, which excludes food and energy, and is seen as a better predictor of future inflation, rose 4.7%. U.S. consumers' spending jumped a seasonally adjusted 1.8% in January, from the prior month, the largest increase in nearly 2 years, as they shelled out for goods such as refrigerators and cars and spent more at restaurants and hotels. The report was the latest sign of the economy's surprising vigor last month, after it weakened late last year. That likely motivated the Fed officials to raise interest rates to higher levels than they anticipated in December, and to end any discussions of whether to pause increases this spring. Inflation is too high, said Cleveland Fed President Loretta Mester on Friday. My view of the economy hasn't changed that much. We have inflation pressures that are pretty in there, Fed Governor Philip Jefferson said Friday, that he saw greater evidence that the central bank would face a long inflation battle because strong hiring and wage gains could sustain firmer price pressures. The ongoing imbalance between the supply and demand for labor, combined with the large share of labor costs in the services sector, suggests that high inflation may come down only slowly, he said, at a conference in New York City. The January spending boom, a reversal from a small spending decline in December, was driven in part by a strong increase in household income. Wages and salaries grew 0.9% in January, more than twice as fast as in the prior month. Minimum wage increases and other annual raises kicked in for many workers in January. Incomes were also boosted by an inflation adjustment in Social Security checks at the start of the year, which could help the roughly 70 million recipients spend more. Total Social Security income rose 9% in January, compared with December. The personal saving rate increased to 4.7% in January, the highest in a year. After the inflation reports released Friday, investors expected the Fed to raise its benchmark federal funds rate by a quarter point, or 25 basis points, at policy meetings in March, May, and June, boosting it to a range of 5.25% to 5.5%. Investors in interest rate futures markets on Friday saw slightly more than a 1 in 3 chance that the Fed would raise its benchmark federal funds rate by a half percentage point, or 50 basis points, at the central bank's next meeting, March 21st to March 22nd. Ms. Mester has said previously that she favored raising rates by a half point at the last meeting, because she is confident rates need to rise above 5%. The central bank could end up holding interest rates at a higher level for longer than it normally does. The Fed raises rates to combat inflation by slowing the economy, which can risk a painful downturn. On Thursday, the Commerce Department said the U.S. GDP grew at a 2.7% annual rate in the fourth quarter, adjusted for seasonality and inflation. It's a strong pace, but slower than in the third quarter. The fourth quarter expansion was in part driven by a buildup in inventories, which some economists see unwinding this year and weighing on growth. Many economists expect the Fed's actions will eventually cool the economy. Forecasting firm S&P Global Market Intelligence on Friday estimated gross domestic product would contract at a 0.3% annual rate in the first 3 months of the year. Friday's report showed that on a monthly basis, the PCE price index rose 0.6% in January from December, the largest gain since June. When adjusted for these rising prices, spending rose 1.1% in January from December. Some consumers are weighing whether to hold off on purchases in hopes high prices will fall, or buy now in case they rise more. James Lindley, a 71-year-old retiree in Fort Lauderdale, Florida, said prices of food and home insurance have increased. High prices has also made him cautious to spend on travel. He said he is preparing to fly his family to a wedding in Spain later this year, but has been put off by $1,500 worth of flights. I'm watching the prices and we're having to pull the trigger pretty soon, he said. Back to Buffett's letter, Warren said, it's crucial to understand that stocks often trade at a truly foolish prices, both high and low. In truth, marketable stocks and bonds are baffling. Their behavior usually understandable only in retrospect. The lesson for investors: the weeds wither away in significance as the flowers bloom. Over time, it takes just a few winners to work wonders. And yes, it helps to start early. Berkshire had a good year in 2022. The company's operating earnings, exclusive of capital gains or losses from equity holdings, set a record at $30.8 billion. The GAAP figure, absent our adjustment, fluctuates wildly and capriciously at every reporting date. The GAAP earnings we are required to report had a loss of $22.8 billion. Capital gains, to be sure, have been hugely important to Berkshire over past decades, and we expect them to be meaningfully positive in future decades. That's good to hear as an investor of both U.S. stocks and bonds. Thus began our journey to 2023. A bumpy road involving a combination of continuous savings by our owners. That is, by their retaining earnings. The power of compounding, our avoidance of major mistakes, and most important of all, the American tailwind. As for the future, Berkshire always hold a boatload of cash and U.S. Treasury bills along with a wide array of businesses. Our CEO will always be the chief risk officer. Let's end this video by one affirmation by Buffett's partner, Charlie. Warren and I don't focus on the froth of the market. We seek out good long-term investments and stubbornly hold them for a long time. Well, our time to buy is coming. And this is my client Teddy Eazzy's book, Wicked Pussy Perfume. It is a femdom novel, and it's about money and the stock market. So order your copy today. You are such a good boy for watching my video right till the end. Bye.